Welcome back. On to the big CNBC-TV18 exclusive. Then the RBI Governor Shaktikanta Das has been ranked as the top central bank governor by US-based Global Finance magazine. My colleague Malvika Jain met with him in Washington, D.C., where he spoke about the actions taken against NBFCs in the recent past and said that he believed there were no systemic risks with respect to business restrictions imposed on lenders. Listen in.
No, there is no systemic risk. In fact, I would like to emphasize that at the moment, at the system level, the banking sector and the NBFC sector, at the system level, they remain very robust. The various parameters, the regulatory parameters, the various financial indicators of both banking and NBFC sector, they continue to be very strong. So at the systemic level, there is no problem. But where we saw the problem was in the microfinance sector. You see, in 2022, we came out with new guidelines relating to microfinance lending. Earlier, the principle was that cost of funds, the interest rate was supposed to be the cost of funds plus 12% margin, which the MFI, the microfinance lenders were allowed to charge as interest rates. We deregulated that in 2022 because this 12% margin was becoming kind of a benchmark for everyone.
Sure.
We deregulated that and we expected that competition will result in optimization of the interest rates for the benefit of the borrowers. And who are the microfinance borrowers? They're basically the small borrowers, people who do not have, who are not economically very well off. So therefore, we did that deregulation on the expectation that competition will lead to better, lead to reasonable interest rates for the clientele. Now, unfortunately, that has not happened. We have been constantly voicing, the Reserve Bank, myself, my colleagues, on a number of occasions, we have been voicing our concern. In fact, even in the last monetary policy statement, I have also mentioned that. Now, what happened is that what happened was that in our on-site and off-site supervision, we found a number of NBFCs charging exorbitant interest rates.
Right.
Interest rates going up to 40%, going up to 45%. Now, and who is the borrower? The borrower is he is a man of small means.
Right.
And these are not well-off sections of society. And a 40-45% interest rate or even 35%
is a lot.
I don't want your viewers to assume that if I say 35 is the tolerable limit. I'm just using it by way of a random example. Now, such excessive interest rates are usurious. And apart from that, some of the charges, like for example, a few days of delay in repayment, the penalties are exorbitant, and sometimes the penalties are not adequately transparent. So therefore, whatever measure we have taken, it's in the best interest of the customer. We found certain outliers, and even in these outlier cases where we have taken action, we have been in bilateral engagement with each of them for last several months. Now, when we see that appropriate corrective action is not taken, we engage first. And when we see after several months of engagement that corrective action is not being taken to our satisfaction, then we have to act and protect the interest of the consumers, of the customers.
Sure. And then banks have been reporting increased stress in unsecured retail loans. The RBI has raised risk weights in this segment last year as a warning. Does this remain a concern for you?
No, I think after we introduced those additional risk weights, etc., in November last year, the segments where we impose these additional we impose certain additional regulatory compliance requirements, the provisioning requirements. In those sectors, we have seen moderation in credit growth. So that has happened. There are, with regard to other sectors, we are closely monitoring every aspect of the credit market, every subsector of the credit market. We are monitoring. As and when something is required, we will act and we will take preemptive action before the problems start building up.
RBI's draft proposal on liquidity convergence norms has been in the public domain for a while. Banks have expressed concerns about the potential impact on capital and by extension on credit growth. Is there a possibility of some kind of softening of your stance on this issue?
We have adopted in the formulation of regulations, we have adopted a very consultative approach. And that is the purpose of putting this discussion paper, to get comments of the stakeholders, to take that into consideration, examine that, and then come out with our guidelines. We have received a number of suggestions.
Well, and you can hear views from the RBI governor on moderating inflation, but the risk around it on the domestic economy doing well and the positives significantly outweighing the negatives when it comes to the festive season demand. Catch excerpts from the exclusive interview all day today on CNBC-TV18.